Oh, YouTube family, what is going on? Hope everyone's been having an amazing day, an amazing weekend, and just an amazing time in general. I'm so happy to be making another video, and in today's video, what I want to be showing you guys is simply what you need to be looking out for when you're trading. Now, this might be quite a very vague concept, but I'm basically going to show you a few things, like a few checklists or flowcharts that you can simply use to be basing your trading strategy off. All right? Because there's so much stuff out there on so many different time frames, and they teach you so many different things. They teach you about plotting your key levels. They tell you about waiting for a break below some kind of structure, waiting for some kind of momentum, waiting for some kind of, I don't know, rejection of a level. And it can all be very overwhelming. When you see a whole massive price chart like this, you're probably going to be thinking, oh my God, I just have no idea what on earth I'm looking for or what I'm meant to be doing. So I'm going to eliminate so much of that fog for you today by just telling you some very, very, very simple things. Okay, and this will go off. This will be applicable to any time frame. Okay, but just be aware that when you have key levels, okay, if you're using key levels, obviously if you go to the 1 minute time frame, the key levels are not going to be respected as much, say for example the daily time frame. Pardon me. Now granted, levels don't get respected, levels get violated on every single time frame, but the higher time frame you go, typically more often than not, certain levels are going to be respected. The lower time frame you go, the more they're going to start getting violated. Okay, so that's just something to keep in mind. Okay, so when you are trading, no matter what sort of market conditions you're at, if it's messy, if it's ranging, if it's trending, the first thing that I want to teach you guys is that the first thing you need to look at is where is price in its overall structure. Okay, where is price in its overall structure? Okay, and you're going to have to take stock of simply what price is doing. Okay, so if we're looking at USD CAD, okay, we can see that price is pretty much in a flipping massive range. Okay, so depending on how you guys like to trade, this isn't me telling you some trading techniques. This is just for me to give you some kind of a basis on where you can essentially go. So that's the first thing you're going to be looking at. Okay, where is price in its overall structure, or what is simply price doing in its overall structure? The question you need to ask yourself is, oops a daisy. Okay, oh gosh. Okay, oh gosh, okay, fine. Doesn't want to let me break a line. So is price trending or ranging? Okay, and it should be very, very simple to decipher. Okay, we're just looking at the 4 hour time frame from now, but again, like I said, to be fair, I can show you guys multiple time frames if you want to. I can definitely do that in this video. So where is price in its overall structure? So what you essentially want to basically do is look at the major tops and bottoms. Okay, we can see the major bottom and we can see the major top. Okay, that's the first thing that you're going to basically see, and we can see clearly that price is ranging by here. Okay, now what's the next step? Okay, once you've figured out, where price is in its overall structure, the next question you're going to ask yourself is, what is price? Actually, let's put this here. What you're then going to basically do is mark out the current price levels. Had to think about current levels of price or current price levels, whichever one, is all basically the same thing. Okay, and what I'm basically going to be teaching you now and telling you now is that you're going to forget this notion of, when I'm looking at my price charts, I need to go, if I'm, say for example, looking by here, this is where I'm starting my analysis. Let's just do something like, I don't know, let's go by here. Okay, forget that. Okay, you're not going to do this anymore. Okay, let's go and look at all of our key levels. Okay, I've got a key level by here. I've got a key level by here. I've got a key level by here. I've got a key level by there. I've got a key level by there. I've got a key level by there. I've got a key level by flipping everywhere. Because when you're drawing stuff like this, how on earth are you going to be able to pinpoint some kind of direction or some kind of levels? You know, like, let me just show you something quickly, okay? Let me just delete everything. I'll go and readjust all those things that I made. If I just go ahead and do this now, I'm going to close my eyes, okay? And I'm going to just put some random levels in place, okay? I'm going to just go back a bit more. Let's close my eyes, okay? And just put that level there. Put that level by here. Put a level by there. Put a level by there. Put a level by there. Let's go up a little bit. There, 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 and there. Okay? If I go back now, we can basically see that those random levels that I put, at some point, they're going to be touching levels. Look, by here, you can see levels by here, you can see levels by there. If you keep on going back, I'm sure this one's looking a bit weird, get touched by there. So it's just for me, in my opinion, for what I've learned and what I've tested, all of that, I used to do this kind of stuff. Top-down analysis, plotting all these levels and waiting for price to come and react to them. What I've basically learned is that price does not give a shit about all the previous action to the left. You know, I'm not saying like this previous action. I'm talking about way back. Okay? So I want you guys to stop doing that and focusing today on where price is currently. Okay? So let's go back and put our checklist in there. Where is the overall structure? Okay? As in, let's just put, what is the overall structure in price? Okay? Are we trending or are we ranging? Okay? So if we're looking at the price at this point, okay, we can clearly see that price is ranging. So then our next step is, oops, daisy. What on earth just happened there? Okay, so our next step is mark out current levels. Okay, so we're looking at the overall structure. We're seeing if price is trending or ranging, okay, by simply just looking at what it's doing now or looking overall what the structure is. I guess we can see that price had traveled upwards, it had broken down, it had come down by here, it, paused by there. So not a real sort of trend, I guess. So we can ascertain that if it's not trending, then it has to be what? Ranging, okay? So then we're going to mark out our current levels. Now that we've seen that price is ranging here, we're going to mark out our tops and bottoms, and we're going to do that by going from the bodies to the wicks. Okay, this is very, very important. Okay, you can do something like this if you wanted to. There's no right or wrong way to do it. If you wanted to do it like this, or if you wanted to do it like this, for example, that in itself is perfectly fine. That would probably be a little bit more accurate, okay, because we can see that price, there were no wicks by here. This is where the level closed. That's what I basically say. The level got closed. Okay, wicks to the bodies, draw it out a little bit more accurately, and bish bash bosh. Okay, so that's basically what you're doing. Okay, now depending on what your trading strategy is, whether you trade consolidations or not, I'm going to go to some trending examples afterwards, but let's just look at a ranging market. Okay, because I said we don't care about information far to the left, it doesn't mean that there isn't information to the left that we can use, that we can't use. Okay, I'm just talking about we don't want to be marking levels like this. Okay, we don't want to be doing stuff like that. You can say, well, I marked this level and it reacted by here. Well, I would argue that price didn't really react to this level. Okay, what happened here is that price failed to break at this level for whatever reason. If it was that level, fine, I really don't care. I'm concerned with the fact that price is currently, for some reason, rejecting this level, and now price is, for whatever reason, rejecting this level. Okay, you're going to find a lot more success if you base your levels off current levels as opposed to levels from the far left, right? Okay, so let's just keep on going because there's something else I wanted to show you guys. Okay, okie dokie. Okay, let's say, for example, for whatever reason now, you're expecting price is going to break down by here. Okay, I'm going to tell you something about what I call the brick wall theory. And this is so important in being able to identify correct levels, okay? Because if you are a price action trader like me, then you know very well about the break and retest pattern, okay? So this pattern, oops-a-daisy, basically goes off previous highs or lows that got broken and we're looking to trade off them, okay? You can see it happened by here. You can see, I can't really see any other examples by now. Okay, but this only works when you are in a trending market. Okay, oh goodness me, what the hell happened there? But the brick wall theory essentially ignores all that break and retest stuff, okay? And what it does is that it focuses on levels from here, okay? When you see something like this is the brick wall, okay? And we're always going from the right side of the brick wall, going down, and we're scanning until we see the first level that we can identify. And in this case, it's by here, okay? If for whatever reason, you know, this price action was up by here and the brick wall was, I don't know, down by there, okay? We're basically, you know, going to be, you know, let's say, for example, the consolidation broke below by here, right? The consolidation broke below by here. We've got all, you know, we got this brick wall. If there was some wick rejections at this point, okay, this is the level that you're going to mark. Okay, I'll make this much clearer in some other examples because I know this might be something a bit confusing for some of you. Maybe it is, maybe it isn't, I don't know. But essentially, you're not going to be going to the left side. You're going to stick to the right side, okay? And you're looking for a swing high or a swing low. Let me make this clear, okay? Key level equals swing high, low, or an area with multiple wick rejections, okay? 2 or more. And what do I mean by wick rejections, okay? We can see the price is rejected by here. We can see prices rejecting by there, by there, wick rejections by here. Okay, wick rejection is not something like, I don't know, let's have a look. Something like this, okay? These are just wicks. It's just nothing. You want to see some kind of rejection, okay? So, key levels are swing highs or swing lows. You know, we can see swing high, swing high, swing high, swing low, swing low, swing high, swing low, swing low, swing low, okay? But now here's going to be the interesting thing. Why do we not care so much about this level, but this level, okay? Because this is recent, okay? It's going to take you some practice, and I'm going to make it very clear on how far back do we, where do we stop? When we're looking back, where do we essentially stop? Okay, that's something I'm going to make clear maybe in this video or the next video, but just work with me for this, you know, for this particular bit by here. Okay, just quickly recap. Price has been, first step, where is the overall structure? What is price currently doing? Okay, we can see price is ranging. Okay, so we mark out our current levels from the bodies to the wicks. Okay, and any, say, adjacent wicks that you see, include them. Okay, what do I mean by this? Well, if you, for example, marked out this key level by here, okay, you did this, you're basically going to look, right, to the right and see, oh, well, this wick hasn't been accounted for. It's pretty much adjacent, right? Boom. Just include it. Okay, so that's pretty much it. Okay, and the reason why we're marking out this key level, okay, is because if you wanted to take a trade, you need to be aware of certain levels that could give you problems. Okay, so by all means, price could simply just, you know, it could just completely break off it. Okay, but it's very important, especially on the 4-hour time frame, to note these key levels. Okay, and that's essentially it. Price is technically still ranging. Okay, because it's respected this level. If it keeps on pushing now, what's it doing? Okay, now price has basically broken out. Okay, so this kind of changes everything. Okay, you're not always going to need the brick wall theory because sometimes you just don't see it. Sometimes it's literally just not there. If there's nothing now, when you see something like this and you see a break and there's no recent key levels, I just want you guys to try and be as simple as possible. Okay, there's no recent key levels. You can't see anything. Okay, this is not recent. That's 16th of October. This is 24th of November. Okay, ignore everything to the left now. Okay, so let's start our process again. Okay, what is the overall structure? Is price trending or ranging? okay, well, price is now trending, okay, because it's broken lower, right? And we have to now assume that price, we can see the price is moving downwards, okay? Just be very simple, very clear, price is moving down. Simple, okay? Now we're going to mark out our current levels, okay? When you're in a trend, the only levels that you need to basically mark out, okay? Where was my key levels thing? Okay, let me put it back here. Key levels to mark, okay? And this is for a broad, what do I say? This applies for the whole spectrum of trading, because you're not, just because there's key levels to mark, you're not always going to see them on the screen. So you just need to see which ones are applicable to what you're seeing on the screen. Okay, so the key levels to mark equals wick rejections. What did we say before? Can't remember. Oh yeah, swing highs and lows. Okay, and then lastly, our trend points. Okay, and what are our trend points? Okay, trend points are our highs, our lows, our higher highs, our lower lows, and our higher lows and lower highs. Okay. Poof, okay. I'm really glad that I'm getting all this information out there, because this is all so important, guys. Okay, so important. Take a screenshot of this if you need to, but might need to watch this video again, but this is all stuff that you really need to digest, okay? So when we're looking at a downtrend right now, we can see, okay, what I want you guys to do is simply just look at price as it is. Don't look too much to the left. Just look at it from now and try and draw it like this, okay? So what can we see? Let's just start from here, okay? So this here is this push, okay? So price comes down, okay? Price, oops, a daisy. Oh, go away. Go away. Leave me alone. Right, so boom, price pushes down, price retraces, okay? And it does some messy stuff. Let's just, what does it do? Okay, I'm going to try and draw as best as I can. Okay, so price comes down by here. Let's just do this now, okay? Hang on a minute. It's getting a bit funky. I'm just trying to decide what's the sort of most simplest way I can show it to you guys. But I guess I just have to kind of draw it out just to know myself what it kind of looks like. Okay. Okay, cool. That's perfectly fine. Okay. So if you haven't watched my market structure video, then I'd recommend you go ahead and watch it, because this level, you would know, is very, very important. Okay, so this level is this level by here, right? And why is this level important? Because this is basically where, if so long as price is traveling below this level, okay, then we are basically still in a downtrend. Okay, what other levels are you going to be marking? Okay, well, then you're also going to need to mark your, what are these? These are your previous lower lows. Yeah, I'd say these are your previous lower lows, if that's what you want to call it. Okay, boom, previous lower lows. And then we're basically going to wait and see when price has shown us that this is a true low, okay? There we go. Okay, so price has come up by here, and there we are. So we're going to mark that level out, okay? We're marking this level out, okay? In fact, realistically, it should be this level, okay? But I don't really want to sort of confuse you guys too much, so let's just... Do you know what, for now, let's just ignore that level and just go off the recent and the current levels, okay? So let's draw our levels properly. Let's go from the bodies to the wicks, okay? And there we go, okay? And the reason why we draw from the bodies to the wicks is because if price closes, a full body close past this level, then you know that it's just been violated. You don't need to, the level's not respected anymore, okay? So at this point, we're basically going to wait and see for some kind of reaction. Price doesn't always have to react. So what price has done by here is that it's come to take, is it going to retest this level? Boom. Okay, fantastic. That's exactly why we mark these levels. Okay, so price then breaks below. Okay, now what this means is that this was our TDP. Okay, TDP equals trend defining point. Okay, for uptrend, they are previous high lows, and downtrend, is previous lower highs, okay? And they only get validated when price has made a new higher high or a lower low respectively, okay? So we mark out this level. So as this level was forming, we basically mark it out, okay? We mark out this level as well, right? All, again, just recent levels. We don't give a shit about anything else because I promise you guys, price does not give a shit about it, okay? So now that price has broken past this level, okay, this is now our previous lower high and therefore our TDP. So long as price is respecting this level, then we are in a downtrend, okay? So let's just keep on going, and where we're marking out some more key levels, okay? So we've got this key level by marked. You guys probably already see it. We've got to mark our lower low, okay? So we're essentially waiting for some kind of reaction to something. And this isn't me teaching you guys how to place trades. I'm just kind of showing you why these levels are important to mark, okay? So price is basically broken above. And let's just see if price wants to, again, see, it didn't break below this level, okay? And it wanted to, you know, be a bit silly, okay? And it basically pushed down, okay? Price makes a new lower low, validating this as our next TDP, okay? So long as price travels below here, we are in a downtrend, all right? And what we can also see here from our recent levels, right? As price broke below, okay? We've marked it, okay? It's a place we can take trades off. And what happened? Price did in fact go down, okay? So if you need to go and rewatch this video, then go ahead and do it. But what I'm just trying to explain to you is, you know, if you plan your days like this, then you're not going to go wrong. Find out what price is doing currently. Mark out your current key levels and basically base your plan off that. Okay? I'm not here to, right now, I'm not going to, what I can do, I can teach you some entry techniques and stuff and how you can place trades and stuff. But I just wanted you guys to ignore all that other crap. Stop planning your key levels all around here, all around there, and just focus on what price is doing currently. Okay, and I promise you, right, you're going to take some losses sometimes. It's, you know, it's absolutely fine. But if you're just focusing on what price is doing currently and you're being as intentful as you can, as focused on where price currently is and trying to ignore all this noise, I promise you, you will find much better success than just planning all these other random levels. Okay, these levels, these levels, these levels, these levels. You get the picture. Okay, if you haven't watched my market structure video, go ahead and watch that, guys. And please, if you found this video interesting, then leave a like, leave a comment, tell me what you guys want to see. And yeah, it's been an absolute pleasure to be teaching you guys. Thank you so much for giving me this opportunity, and I look forward to seeing you in the next one. But for now, take care. Bye bye.